Hey everyone, welcome back to Corporate Decoder. Today, ABCD Corporation just filed their semi-annual shareholder report, and I am seeing one trend that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is showing some significant shifts in their holdings and costs, and it tells a story about their current strategy. So what we have here is a certified shareholder report from a B bond fund incorporated. This is essentially a report card for investors, giving them the important details about the fund's performance for the period from the 1st of November of 2025 to the 30th of April of 2026. Think of it as a checkup on how the fund is doing and where its money is invested. Let's dive into some of the key numbers. The fund has net assets totaling around $804 million. That is a pretty big number. They hold 389 different investments in their portfolio, and their portfolio turnover rate is 47%. This turnover rate tells us how often they're buying and selling assets within the fund. A 47% turnover suggests they are actively managing the portfolio, but not completely churning it. They paid out over $2.6 million in advisory fees. That is the money paid to the people managing the fund. And of course, there are different classes of shares with varying costs. Now let's talk about where they are putting their money. Their top 10 holdings are pretty diversified. You see big names like Welltower Inc with over $24 million invested, Prologis Inc with over $22 million, and Equinix Inc with over $17 million. They also hold positions in ExxonMobil Corporation and Nvidia Corporation, showing an interest in both traditional energy and technology sectors. It is interesting to see a mix of real estate, energy, and tech in their top holdings. Looking at the broader portfolio breakdown, what jumps out is the significant allocation to real estate stocks at 36%. This is a substantial chunk of the fund. Then we see commodity-related derivatives at 31% and commodity-related stocks at 17%. This indicates a strong play on commodities, likely as a hedge against inflation or for potential growth in that sector. Inflation-sensitive stocks make up 16%, aligning with the commodity focus. When we look at the type of securities, common stocks make up a large portion at 79.7%. Investment companies represent 1.8%, and short-term investments make up 15.1%. The rest is in other assets and liabilities. This breakdown confirms a strategy focused primarily on equities with a stable base in short. Term investments. Geographically, the United States is their largest holding at 49.9%. Japan follows at 5.3% and the United Kingdom at 4%. This shows a strong preference for domestic investments but with significant international exposure, particularly in developed markets. Let's talk about the cost for a hypothetical $10,000 investment in the advisor class shares, which is AMTIX for the last 6 months. The cost was about $48, which annualizes to 0.88% of the investment. This is a pretty standard expense ratio for an actively managed fund and gives us a benchmark for what investors are paying. Now, if we look at Class 1 shares, AMTOX, the cost for that same $10,000 investment is $59, annualizing to 1.08%. This is slightly higher than the advisor class, which is typical for different share classes within the same fund, usually reflecting different distribution or service fees. For Class of shares, AMTAX, the cost jumps to $62 or 1.13% annually. This class has the highest cost among the ones we've looked at so far, likely due to higher sales charges or distribution fees associated with it. And finally, Class C shares, ACMTX, show a cost of $103 or 1.89% annually for that same $10,000 investment. This class typically has the highest expenses due to its structure, often designed as a way to avoid upfront sales charges but with ongoing fees. Shifting gears a bit, we see the AB Bond Inflation Strategy Fund. Their advisor class shares, ABNIX, have a notably lower cost of just $25 or 0.50% annually for a $10,000 investment. This indicates a class designed for lower expenses, likely for institutional investors or through specific investment platforms. Then we have Class 1 shares, ABNOX. The cost here is $30 annually or 0.60%. This is also quite competitive and suggests a similar target audience as the advisor class. Class 2 shares, ABDC, are priced similarly at $25 a year or 0.50%, matching that advisor class cost and pointing towards very efficient expense management for these specific share classes. Back to class of shares for AB Bond Inflation Strategy, ABNAX. The cost is $37 annually or 0.75%. This is a bit higher than the classes we just saw, which is expected. Scroll Class C, ABNCX, EGC Center, and Class C shares. ABNCX come in at $75 annually or 1.50%. As we've seen, these classes usually have higher fees, reflecting their different distribution structures and target investors. Scroll Advisor Class, ABDC Center. Let's look at the AB Income Fund. Their advisor class shares AGDIX have costs of $27 annually or 0.54% for a $10,000 investment. This looks quite reasonable, especially for an income-focused fund. Scroll key fund statistics center interestingly. The key fund statistics seem to be largely consistent across different funds within the AB umbrella, at least in terms of net assets and number of holdings when looking at similar types of funds. For the AB Income Fund, net assets are over $2.2 billion with a whopping 597 portfolio holdings. That is a lot of diversification to manage. The portfolio turnover rate is also quite high at 138%. This means they are actively buying and selling a lot of their holdings, which can lead to higher transaction costs but potentially allow for more responsive management to market changes. They paid out over $4.6 million in net advisory fees. Scroll Portfolio Breakdown Center. Now for the portfolio breakdown in the AB Income Fund. It is heavily weighted towards governments' treasuries at 51%. This indicates a conservative approach prioritizing safer government debt. Mortgage pass-through securities follow at 27.5% and corporates investment grade at 17.7%. The rest is in shorter-term investments and other assets and liabilities. This breakdown suggests a strategy focused on stability and income generation with a strong emphasis on government-backed assets. Scroll Advisor Class, ATIC C Center finally, we have the ABTAX, Aware Fixed Income Opportunities portfolio. Advisor Class shares, ATICs, come with a cost of $31 annually or 0.62% for that hypothetical $10,000 investment. This is a good cost for a fixed income fund focused on tax efficiency. Scroll Credit Rating Breakdown Tie Center. What is really interesting here is the credit rating breakdown for this portfolio. A significant portion, 35.5%, is rated AA and another 23.2% is rated. This means they're holding a lot of high quality debt. BBB rated securities make up 12.2%, and their not rated category is a substantial 16.7%. This not rated segment could be worth digging into further, as it might hold less transparent but potentially higher yielding opportunities, or simply includes instruments like equities or currency contracts that don't have credit ratings. Scroll State Breakdown % of net assets, center looking at the states where the fund has significant exposure. California leads at 12.6%, followed by New York at 6.8% and Florida at 6.2%. This diversification across states is standard for municipal bond funds, helping to spread risk. Scroll Net Assets center across these different funds. We are seeing substantial net assets, suggesting significant investor confidence and capital managed by AllianceBernstein. The consistent reporting of key stats across various funds indicates a standardized approach to investor transparency. Pass to TTS, so what does all this mean? You've got the AB All Market Real Return Portfolio, which is actively managed, tilted towards real estate and commodities with a healthy dose of domestic and international stocks. Then you have the AB Bond Inflation Strategy and AB Income Fund, showing more conservative approaches leaning heavily on government and investment grade debt. And finally, the AB Tax-Aware Fixed Income Opportunities portfolio, which is also focused on high-quality fixed income, but with a significant allocation to unrated assets that warrant closer inspection. What is the takeaway here? AllianceBernstein is running a diverse set of funds catering to different risk appetites and investment goals. We're seeing active management, a strong focus on quality in their fixed income offerings, and a clear push into commodities and real estate for inflation protection in some of their equity funds. The expense ratios are generally competitive, especially for advisor and institutional classes, which is a good sign for investors focused on cost. However, the details within the portfolio breakdowns and the not rated categories always warrant a deeper look for those seeking to truly understand where their money is going. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded.